Okay, so we are going to do this introduction to auto insurance. You can just take these notes wherever you took your notes from 8182 and the car insurance project. So introduction to auto insurance. It's going to be a lot of definitions. So car insurance is an agreement where an individual makes regular payments to an insurance company in exchange for the insurance company making car expenses later. You can get coverage for broken windshields, keys locked in a car, sometimes even a flat tire repair. Those can be added on to your policy. But most common use is to protect you and your car from damages caused by an accident. So car insurance terms. The first one is an accident, which is a sudden, fortuitous event or an unexpected, unforeseen event not under the control of an insured and resulting in a loss. Often used to refer to a collision or insurance event. A claim is any request or demand for payment under the terms of the insurance policy. And your deductible is usually a dollar amount the insured must pay on each loss to which the deductible applies. The insurance company pays the remainder of each covered loss up to the policy limits. So typically kind of what happens if you get into an accident and your car has damage and you want your insurance to fix it, you're going to file a claim. So you open a claim. Then depending on kind of how it's set up, you take your car to the shop. You pay your deductible when your car is ready to be picked up. Deductible is typically $500, maybe $1,000. It varies by your policy. And it doesn't matter how much damage is to the car. Up to a limit, whatever your limit is on your insurance policy. But say there's $2,000 in damage or $15,000 in damage. You pay your $500 deductible or whatever it's set at, and your insurance covers the rest of the $2,000 or $15,000, whatever it is for that car. Again, up to the policy limits. But a claim is that you want them to fix. You want them to fix your car under the policy. Your premium is the amount of money an individual pays to the insurance company each month. So that's like your monthly bill. It is your premium. Coverage, benefits specifically provided for under the insurance contract. So what do you have coverage for? Do you have windshield replacement? Do you have injury or death? Do you have towing? Do you have rental car coverage? Those are all examples. Your coverage limit is the maximum amount the insurance company will pay for a particular claim. So for example, it could be $15,000 per person and $30,000 for more than one person. So, if there were 4 people in a car accident and you had $30,000 coverage limit, they're only going to pay up to $30,000 in medical bills for all 4 of those people. And the copayment is the amount of money the insured must pay on each loss before the insurance will pay anything for that particular loss. For example, like $250 per loss claim. That's similar to a deductible, but for a loss, like for a car, if you total your car, you could end up paying that copayment of $500 or whatever it's set. This is $250, and then they would pay the remainder. Then there's a good student discount, which is a discount on the insurance premium given because the driver is a good student. An example, you might get 40% off your premium for GPA of 3.0 or higher. So they give different discounts for different things. And one, if you are a student and you don't have driving history, then you may be eligible for a good student discount because they think the higher the GPA, the higher chances of you being a safe driver is what they are kind of correlating there. Glass coverage, yeah.
How could they correlate that? Like, what does that have to do with driving?
Probably more like responsibility.
Yeah.
If you're responsible enough to keep your grades up, you're responsible enough to drive
Right.
safely.
Does that mean all good drivers have good GPAs? No. Does that mean if you have a good GPA, you're a good driver? Not necessarily, but yes, it has to do with the responsibility. Glass coverage is optional insurance that pays to repair or replace your vehicle's broken windows. So now you're driving down the street and you pass a big truck and a rock shoots up and breaks your window. If your windshield, you don't have glass coverage, you are responsible to pay for that. And if you have glass coverage, you may be paying for, $100 deductible. It just depends again on your policy. If you don't have it, you're either paying for it yourself or driving around with that cracked windshield. A safe driver discount is a discount on the insurance premium given because a driver has had no tickets or accidents in recent years. So for example, you could get 50% off your premium because you have a record of driving safely. So they're going to give you a discount because they think it's less likely they're going to have to pay for any claims on your account. You're a safe driver. You're not getting into accidents. You're not getting tickets. Even though a ticket doesn't, your car insurance does not pay when you get a ticket, but your car insurance rates will go up because they don't think you're a safe driver. You're getting a ticket because you did something that was unsafe and you broke the law. Therefore, they think you are more likely to get into an accident and cost them money. And liability is any financial responsibility for the injury or damage suffered by another person. So sometimes you may hear or be familiar with the term liability insurance because you are liable to pay for that. You have to have at least enough insurance to cover that. All right. So policy versus coverage. So policy is contractual agreement between an individual and their insurance company and describes the terms and conditions of the plan. So what's your policy? What's kind of listed in there? Your coverage would be listed on your policy. The coverage is the total amount and type of insurance covered for an individual. So again, coverage, the total amount, and the policy is that agreement that you have. It describes the terms and conditions. Bodily injury liability is your, so these are different types of coverage you can consider. And you have to get some of them, but you can have different amounts. And we'll go over that on the last slide. But the bodily injury liability is if your actions are found to be the cause of an accident, the bodily injury liability will cover the cost of injuries and even death that is caused to somebody else or yourself. So bodily injury, they pay for the injuries to the body, your medical bills. Property damage liability is if your actions are found to be the cause of an accident, so you caused the accident, it covers the cost of the property damages. So cars, fences, hopefully not houses, but if you ran into a house. So property damage liability is going to cover property. Often the state minimum is not enough in an accident. So if the state minimum is $15,000 for bodily injury or $5,000 for property, you guys should be aware that $5,000 for property damage isn't very much. Cars often cost more than $5,000. So if you have a $5,000, that's your limit that your insurance company is going to pay, and there's an accident, you're responsible for paying the rest if you cause the accident. If they're only going to have bodily injury up to $15,000, if their medical bills are $18,000, you have to pay the other $3,000. So it's something that you want to make sure you have enough coverage, because if that were to happen and you own your house or your car, and they could sue you and you could lose things. So you want to make sure you have enough coverage to protect yourself and your assets. Personal injury protection covers treatment of a passenger's injuries. It also covers things like lost wages, the cost of helping the passenger perform day-to-day duties that is prevented by the injury. And it's paid whether the driver is found to be the cause of the accident or not. So it doesn't matter who caused the accident, personal injury protection. But again, it also covers things like lost wages. Not just your medical bills. And then collision coverage. If you go to get auto insurance, collision coverage will definitely be something that gets talked about. It's if you hit another car or even lose control on a slick road and hit a tree, it covers, the collision coverage will pay for the repairs. So collision coverage is when you get into a collision. Whereas you will also often hear comprehensive and collision. Comprehensive, and they're going to be listed separately on your insurance policy. Comprehensive is used in the event of damage that is not caused by a collision. Things like fire, flooding, theft, hitting an animal, that's going to be comprehensive. And uninsured motorist is used if the other party in the accident does not have insurance, or in instances where you're the victim of a hit and run. That's kind of like you don't know who hit you, you assume they don't have insurance. So you want uninsured motorists so that they will cover accidents if the other person doesn't have insurance. You're not at fault. So if you're not at fault, your insurance company is not going to pay for it. But if that other person doesn't have insurance, then the uninsured motorist will kick in on your policy. And then you may also want to consider towing and rental car. So most policies offer towing and rental car reimbursement as an add-on. Should you have an accident or your car breaks down, it might be a peace of mind. It is not required, and some people might think, well, I have AAA, so I don't need towing, and that's fine. You might not need towing, but think about a rental car. If you get into an accident and your car has to go into the shop, your fault or not, so you have to take your car to the shop. If you don't have rental car coverage, what are you going to do? Are you going to rent a car? And that gets really expensive. Are you going to borrow a friend's car? Maybe you have a spare car. Maybe not. Are you going to ride your bike, take the bus, take Uber? You know, if you don't have rental car coverage and your car's in the shop, you can put yourself in a tough place. So those are some of the basics, but California defines the minimum financial responsibility being $1535. And what that means, that's the minimum liability. $15,000 for injury or death to one person. That's the most they will pay. And you guys should know medical bills can add up really really quickly, and $15,000 isn't a lot of money. The 30 is injury or death to more than one person. So that's the maximum amount they would pay if there were 7 people that got injured in an accident that you caused. And then the maximum they would pay is the $5,000 for damage to properties. And again, if there were 3 cars in an accident, all 3 cars are going to be worth more than $5,000. So then you are responsible beyond that. So that's something you want to keep in mind. If in just kind of the way this is written, it might be something like 100, 300, 100. That would be $100 per person, or $300 for everybody, and $100,000 for property damage. Property damage can often be lower because medical bills tend to add up more quickly than just a one-time repair to a car, even though that is also very pricey. So you want to keep that in mind. All right. So your insurance will take care of the damage and all of those medical bills and things like that, pending you have the coverage. If your coverage is only $15,000 and you ran into somebody and it's $20,000, you have to come up with the extra $5,000. And if you don't have it, they may sue you, and you may be required by a judge to sell your house, or take out money from, or sell your car, take out money from your house. And again, that's if it's minimal. If you only have $1,535, like that liability insurance on that last slide there, and you are the cause of a bigger accident where there are multiple people and, $40,000 in damage to property because there are multiple cars, that's when there's a good chance you may end up being sued, because somebody's going to want that money. And they're going to want their car paid for. All right. And so just real quick, I want to not be there. Nope, that is where I wanted. So for this week, so you have, I did want to be here, these car insurance questions. It's a Google form. It is some of the vocab and matching like you see in our book. It has some true or false and some multiple choice questions. Everything is due for this week by tomorrow at 3:00, except for your car buying project. That is due by Sunday at midnight. You have plenty of time to work on that still today. And tomorrow you will have a survey. It is scheduled to be posted by 8 a.m. Please complete that by noon. And so doesn't matter if your insurance is inexpensive or expensive. Yes and no. The higher coverage limits you get, the higher your premium is going to be. So somebody that has that bare minimum liability insurance, they might pay a really low monthly payment. Whereas if you up your coverage to 100, 300, 100, your premium is going to be a lot higher. And different insurance companies will offer you different rates, and they all look at things differently. They look at how much your car is worth. They look at how many miles you drive every year. The more you drive, the higher the probability of being in an accident. They look at your driving history, how long you've been driving. Do you have any tickets? Do you have any accidents? So they factor all of that in. And you can get quotes from multiple insurance companies, and they can be very different for the same coverage, just because the way their algorithms work. So it is a good idea, in my opinion, to shop around for car insurance. All right, so you're doing that form. You are finishing your car buying project. 8.1 and 8.2 from the book, they are being graded for accuracy. So make sure you get that Google form typed in. If you handwrite your answers, you're just in the same spot. Instead of filling in the Google form, that's where you'll submit those photos for the week. If you have other questions, I'm happy to stick around. Otherwise, I will see you guys Monday and hope you have a good weekend.